Given Bitcoin's rapid price increase, we're beginning to see some signs that the market may be reaching overextended territory. So now we need to find out if BTC has become too hot too fast. Today we're going to be doing a roundup to discuss Bitcoin's current conditions, and where better to start than overlooking the month of March than the monthly returns heat map. That shows so far we've seen a 14.7% increase in the Bitcoin price throughout the month of March. So definitely not a bad month for BTC. If we just go up to the Bitcoin price live chart here, we can see that we are around that $70,000 level as I film this. We've seen a little bit of a pump and a retracement today, but over the past month, we can see this has been a very good and positive month for BTC. We ran up to new all-time highs, smashing through the previous level of $69,000-ish to near $74,000, which is absolutely monumental, especially prior to a Bitcoin halving event, which has never happened before. Before we saw a little bit of retracement to the low $60,000 levels, but that was very short-lived before we saw another pump to where we are now, $70,000, which is pretty remarkable. Like I said, before the Bitcoin halving event, this is one of the fastest we've seen Bitcoin kind of change from the transitionary period into this early stage bull cycle with such a meteoric rise in its price. We can see that compared to pretty much every single other asset, Bitcoin has just massively outperformed everything, which is obviously great. We're invested in Bitcoin, but it does beg the question, have we maybe got a little bit ahead of ourselves? Have we gotten maybe too overheated, too overextended to the upside, too early into this bull cycle? Like we said, we haven't even seen the halving event yet. And if we look at something like the value days destroyed multiple, we can see that this is becoming incredibly overheated to levels that pretty much mark previous all-time highs, or at least very overextended periods during the latter stages of bull cycles. Right now, this is sitting at a value of over 4 on the value days destroyed. And if we just look at historic comparisons, we can see that the previous 2017 all-time high, this was about a value of 3.1, although it did reach a value of just above 4 just a few months prior to that. And then in the 2021 cycle, we didn't even see a value days destroyed multiple exceeding 4. So this is definitely overextended territory to some extent. So what is the value days destroyed multiple, and why should we be paying attention to this? Well, it's taking into account the coin days destroyed. So this is looking at the amount of BTC a wallet has been holding and multiplying that by the amount of time it was held. So for example, if I held 1 BTC for 10 days before moving it to another wallet, potentially to send, I would add 10 coin days destroyed to the network. Same if I'd held that Bitcoin for 100 days, it would be 100 coin days destroyed, etc. So we aggregate all of these and we kind of get a little bit of a additional weighting to larger holders who have been holding for an extended period of time. And what we can immediately see, just looking at the raw data of coin days destroyed, this has a pretty good hit rate at calling market peaks. We can see that these large, more experienced players in the market do tend to know when to sell their BTC positions. And this has been on an absolutely astronomical rise to the upside for the last few months, pretty much without stopping, which again is pretty different to what we've seen in previous cycles. We do usually see a little bit of an early bull market run up to the upside before maybe a little bit of a correction, maybe just as people are beginning to lock in small bits of profit after they've having to endure multiple years of a bear cycle. But this time is really different. We are seeing this just absolutely skyrocket without any hesitation, really. I think a better way to look at this metric is to look at the supply adjusted coin days destroyed, which is very similar, but it's taking into account the amount of BTC in circulation at that point in time. So really it kind of scales the data a bit better, especially in these early cycles when there weren't as many coins in circulation. And we can see it looks something potentially similar to this double peak cycle. It definitely strayed away from what we saw in the 2017 and 2021 cycle, unless we're seeing potentially the Bitcoin all-time high for this bull cycle being set prior to the BTC halving event, which would be, again, something we've never seen before. So the value days destroyed takes into account that coin days destroyed metric, multiplies it by the Bitcoin price, and then compares that value, or an average of that value, a short-term average, to a longer-term average of that value. If we just scroll down here, it explains a little bit further. It's using a 30-day value of the VDD compared to a 365-day average. And what we can see, like we said, historically, this has been a very good indicator. It may be not calling the exact BTC peak, but definitely calling periods where we're probably overextended and maybe need a bit more of an extended and deeper drawdown period. We can see the best examples are probably here in 2017, when we first reached these extremely high levels of about 3.4, Bitcoin did see a retracement from around $3,000 to under $2,000. And then again, just a few weeks and months later, we saw this reach its peak before Bitcoin retraced from around $4,000 down to probably around $3,000. And then again at the Bitcoin all-time high. So the first time this actually reached this very extended, overheated conditions didn't actually call for a Bitcoin all-time high. And same in the 2021 cycle. This metric actually peaked way before we actually hit the all-time high, especially this was almost a double top cycle at the actual $69,000 level. This metric only topped out pretty low down here. So really, this doesn't necessarily mean that we're definitely going to see an immediate retracement. The top's already in. It doesn't have to mean anything like that. All it is saying is that given where we are in the cycle, we're seeing a lot of old holders who have been holding a huge amount of BTC for extended period of time begin to take some profit on their positions, which usually isn't the best sign to maybe indicate that there's a lot more room to the upside. So as we're shifting from maybe some long-term holders taking profit on their positions, why are we still seeing Bitcoin price increase, and what could lead us to continue to increase a little bit further? Because if we just zoom in here, like we said, we can see incredibly high values above 4 on this metric, but we've actually rebounded from about $60,000 already to about $70,000. And I think we've maybe seen a little bit of a transition from a spot-driven rally where people are buying spot BTC. Of course, the ETFs are accumulating a huge amount of BTC. We're also beginning to see some maybe equilibrium in the spot purchasing and selling as long-term holders are beginning to sell some of their BTC. So maybe at this stage in the cycle, we're actually transitioning from more of a spot-driven move to the upside to maybe a little bit more of a derivative move to the upside. If we just look to the Bitcoin funding rates here, we can see that these have been astronomically high for months now. And especially after we surpassed our previous all-time high, peaked and had a near 20% retracement, these funding rates just did not decrease. People are continuing to long Bitcoin on leverage. They're continuing to take out loans to buy as much BTC as possible. And this isn't necessarily having the most positive impact on the underlying price of BTC, because a lot of these derivatives are derivatives. They're just derived from the Bitcoin price, and they actually don't influence the market too heavily. So potentially we are seeing Bitcoin being a little overheated, at least in the short term. That doesn't mean that we've hit the Bitcoin peak for this cycle, and it doesn't mean we can't extend further. Like we can see from these funding rates, there is definitely further room for people to start paying huge amounts of money just to be able to keep their positions open. But really, until we see a bit more of a extended cool-off period, maybe another 20% retracement, but not just lasting a couple hours. And really, we need to see these funding rates, I think, come down for a bit more of an extended period of time, especially if we look at the coin-denominated funding rates. I think once these flip negative, it's a really healthy indication that a lot of the over-leveraging in the market is maybe settled, and that really sets the foundation for a bigger, solid move higher. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, with Bitcoin's rapid price increase of the last few months, we're seeing some on-chain indications that large and longer-term BTC holders are beginning to take some profit on their positions, which historically is a little bit of an indication that we're reaching, if not an all-time high, that, like we said, some very much overheated, overextended upside conditions. And the value days destroyed multiple, specifically, which we looked at here, looks at the coin days destroyed, which multiplies a holder's BTC amount by their holding period and the current BTC price, and compares that average to a much longer term average to basically get an indication of currently how much BTC profit is being taken at these levels compared to historical averages, and gives additional weighting to larger, longer term holders to really get a good indication of the more experienced market participants to see when they're actually starting to move their BTC. And this metric, like we've seen, is now at extremely hot levels and could lead to a deeper correction near term. But like we said, this does not mean that this is the bull cycle peak. We could see multiple of these extremely overheated peaks throughout one bull cycle. And typically, if we look at something like the 2017 cycle, the first and largest peak wasn't even the all-time high. So maybe we see a little bit of a cool-off period, especially given the funding rates, although those derivatives could match us a little higher before we see any corrections. But I would say at this point in time, just manage your risk appropriately, maybe scale back on the DCA. And if your strategy calls for it, now might be the time to lock in some profits and follow what these longer term, more experienced, large market participants are doing. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are down in the comments below. Do you think BTC maybe did rise a little too much too quickly in this bull cycle? Do you think we are about to see a little bit of a retracement, or at least a stable period of sideways price action to maybe allow the market to just naturally cool off a little? Or are we wrong? Do we think that the super cycle is now in full swing and we're not going to see any long drawn out pullbacks? We're going to see Bitcoin just run constantly to new all-time highs in these new market dynamics. Like I said, let me know in the comments below and on social media. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.